It's 5 o'clock in London, it's midday in New York, 1 a.m. in Hong Kong, 4 a.m. in Sydney, 9 a.m. in San Francisco, and 11:30 at night in Mumbai. Greetings, good morning, good afternoon, good evening, depending on where you are in the world. My name is Patrick L. Young, the IPO-VID Livestream, Series 22, episode number 2. That's a very Fiat 3P number, episode 128 starts here. And we start with the horrific problem of financial crime. NASDAQ published the magnificent Verifin Financial Crime Report 2023 just this morning with an estimated size of $3.1 trillion. Which amounts to $783 billion in drug trafficking activity, $347 billion in human trafficking, $11.5 billion in terrorist financing alone, to name 3 segments of financial crime. Financial crime is easily equivalent to the GDP of the world's 6th largest country, the United Kingdom. The drugs business is just slightly less than Switzerland's GDP as a standalone. Hence this welcome, if worrying, reading presented in the NASDAQ Verifin Financial Crime Report. With $486 billion in bank-related fraud alone, that's something which ought to galvanize a major discussion of the issues, creating a call to action for the financial industry, well beyond just the parish, but no less relevant to financial market infrastructure. In the end, a lot of the problems can be avoided with relatively small but detailed checks, it seems. But of course, there remains a huge need for stringent processes and better approaches. The end result of financial crime is not merely financial losses, but time, which must be spent on fraud aversion, which could otherwise be used productively to help grow the economy, instead of just trying to run a business, pay suppliers, and get paid in a world with so many, frankly, thieving scumbags in the shadows of the interweb and beyond. For a lot of those issues, sound modicum of pre-planning common sense and being streetwise will go a long way. For everything else, and no, they didn't pay for this endorsement, it's worth mentioning there's a Verifin solution within the NASDAQ group. Speaking of NASDAQ, great week for Adina Friedman to kick off the year. She offered a very, very interesting outlook on what she thought was the big trends of the year coming. That was published on LinkedIn last week. And that was followed up rapidly by a tour de force, a keynote. I do believe the very first time a stock exchange boss has given a keynote at CES, the Consumer Electronics Show in Las Vegas. Very optimistic news. Lots of IPOs coming out there, according to her. And indeed, today we hear from the vice chairman of NASDAQ, the NYSE rather, that apparently they've got a very, very healthy IPO pipeline too. Excellent news altogether. Speaking of financial crime, of course, we can't possibly go past without noting the fact that the SEC, rather embarrassingly, had their Twitter X account hacked. What price two-factor authentication, one must now ask? Well, truly, it's been a bit of a credibility shredder for the SEC, and also raises a question about just what do they do with all that data they've been gathering for the course of the last 20 years and all sorts of things in Washington, D.C.'s different financial agencies, if they can't manage to understand how to make secure the login process for their social media. Will the SEC now find themselves, well, we live in hope. Nikkei, they're shoe people. Nikkei, the Japanese index people, they've invested in Wilshire indexes. Deja vu one more time, 4 decades on, I'm forced to ask. The man who brought us the FTSE index, Mark Makepeace, is now in charge of Wilshire indexes, and indeed Mark was an alumnus of this show previously. He's brought in a new 8% direct stake from Nikkei, which alongside the 12% stake of the Financial Times. Now, that's interesting because, of course, then you might think, well, are they going to get the band together again? Mr. FTSE with a 20% stakeholding from what amounts to the Brussels Bugles newspaper group and also their parent company, Nikkei. Very, very interesting. Already there's been a lot of cooperation with Nikkei over Wilshire portfolios for decarbonisation indexes and more. Previously, Mark was our IPO guest, good grief, all the way back in episode 15, discussing indexing the world with FTSE, long before he joined Wilshire and is making a big move once again. However, the really big move in the parish of exchanges this week was what we call the new Ice Age. It's an interesting moment in the parish as leadership of Young's pyramid of exchanges has changed. You will recall that that pyramid measures the size of each market infrastructure by its operating market capitalization. As of right now, CME is about $1.5 billion south of the Intercontinental Exchange Group. ICE reigns supreme. It would appear that ultimately the Terry Duffy monopoly milking strategy does not appear to be the future of markets, and dynamism, albeit dynamism including a huge move into mortgage technology, is the way forward, at least for intercontinental exchange. I still think there's a lot more happening under the scenes there, including a mega move on Putin and much, much more, which brings us elegantly to today's guests, Susan Gidel and Ira Harris. We're going to be hearing from Ira later in the show. Today's episode, we're looking forward to 2024 and what's likely to be happening in what has been, well, a choppy, volatile ride for several years. And here we are in markets which are, well, somewhat confusing as of right now. With 35 years experience in the commodity business, Susan Gidel, who was previously a guest on this show just a number of months ago discussing astrology, the markets, and you. Susan nowadays specializes, as I mentioned, in financial astrology market research and publishes the excellent, I thoroughly recommend it, Red Letter Trading Days newsletter. She's the author of Trading in Sync with Commodities, Introducing Astrology to Your Technical Toolbox, amongst other books. We'll also be having in the second half of the show, Ira Harris, who I will introduce when he comes on board. First of all, Susan, lovely to see you. That was quite a long introduction. Thanks for waiting around. How are you and where in the world are you today?
Well, thanks, Patrick. Nice to be back again. And I am in chilly Chicago, where we're expecting a high today around 3 above 0 Fahrenheit.
Wow. Call it masculine intuition. I had a feeling you were somewhere slightly chilly as soon as you came onto the camera today. I can see it's time to wrap up warm, even when you've got wonderful world-class central heating, no matter what's going on. That weather front's been quite incredible in Chicago the last few days.
Yeah, and it's what to expect in winter. So no big deal. It's been worse. It's been better.
Silly question. Does astrology impact the weather, or does the weather impact astrology?
I think astrology impacts the weather.
Okay, that's very interesting.
I am not a weather astrologer, but there are people who are, and they pay attention to it. I try my hand at it to kind of get a sense of what kind of winter we might be having, but it's just kind of a game for me.
Well, there's so many different specialities within astrology, and obviously yours is financial markets, but of course the weather is wildly important, particularly in the commodity markets, of which you know so much from your past experience across various institutions in Chicago. So tell us, I mean, how does this year kind of stack up generally for markets?
Well, I think it's going to be a really interesting year, and I put a deck together, and if we can start,
let's have a look.
We can get rolling. And that's just an opening page. We'll go to the next one that says a disclaimer, because, I come from the brokerage business, that says
disclaimers are good. Disclaimers are good. Yeah.
Advice, and I'm not registered to give financial advice. So there you have it.
That's it.
But this next one, the really big story for me is Pluto in 2024. Pluto is the most furthest out planet that astrologers watch, and we still consider it a planet. And Pluto's job is to transform. It is to make us get rid of things that are no longer needed in order to clear the path for something new and, importantly, better. So Pluto takes 248 years to go around the sun. So it's only in each sign about every 20 years. Now, it's been in Capricorn since 2008, and it will last leave Capricorn in November of 2024. So for the last 16 years, Pluto has been focused on transforming things that are associated with the sign of Capricorn, which are big business, government. And so I'm sure we all remember that in 2008, there was a pretty big financial crisis. Now, did all the rules that came out of that transform the financial industry? They changed it. Transform, I'm not so sure. But when Jupiter and Saturn hooked up with Pluto in 2020 and COVID hit, I think the way we do business certainly has been transformed since that, since COVID hit. I know in Chicago, I live just 3 blocks away from a commuter train station, and that parking lot is empty. on Mondays and Fridays, but packed full on Tuesday, Wednesday, Thursday. We have significantly transformed how we go about our work with Pluto in Capricorn during this period. Now, the last thing to kind of check in on is transformation of government. And what's interesting for the United States is that when Pluto was last in Capricorn, from 1762 to 1778, this is when the United States had a revolution and transformed itself from being a colony into a democracy. At what astrologers call the Pluto return, when Pluto comes back again to exactly where it was at the time on July 4, 1776. We can stay on that previous slide. We've been in the midst that Pluto return was exact in 2022, but really has an orb of a couple of years. And so from 2020 through 2024, the United States is still in the grips of Pluto return, assessing whether the founding principles in 1776 need to be adjusted, what in Pluto transformation world would be what needs to get thrown out in order to make room for something that is better. And I think we're still in that discussion in this country through the end of this year, particularly because there's a presidential election this year. So the picture on the left is the US Capitol, very Capricorn kind of thing. It represents solidity, stability, unmovability. The photo on the right represents Pluto moving into Aquarius for good for the next 20 years, starting in November of this year. And that image was created with artificial intelligence, using the word intelligence to generate the image. And Pluto will be done with Capricorn, transforming business and government this year, and it will move on to transforming things Aquarius-like, which are artificial intelligence, technology, ideas, independence, global community, those sorts of things. And so we're in this period now of transition. And I was going to say ChatGPT came on the scene about 5 months before Pluto first stepped into Aquarius for about 3 months last year. From March through June last year, Pluto was in Aquarius for just a little bit, and then it backed out back into Capricorn. But it will move back into Aquarius Saturday, January 20th, and stay there through about Labor Day this year, back into a Capricorn again, and then back out again. But ChatGPT came on the scene right before Pluto went into Aquarius for that little bit in 2023. And there was just a survey out yesterday from PwC, CEO survey, that said, and I'm quoting, "Our survey looked at generative AI, which has all the hallmarks of a technology that could significantly change how companies operate. It's also approaching a critical juncture, seemingly poised to transform business models, redefine work processes, and overhaul entire industries." End quote. Well, exactly. This is Pluto in Aquarius, and it's what we're heading for. So now the next slide, please. So here's the dates that Pluto goes back and forth between Capricorn and Aquarius. And to me, this is, and coming from Chicago and Midwest winters, to me, this is the shift. This is like how we're moving from winter to spring. And if you're familiar with Midwestern Northeast winter, about mid-March or so, when we would all used to go to Boca for the FIA meeting, right ahead of that, you would start to get little glimpses of spring. You felt like the sun was getting warmer, the days were getting longer, but it wasn't quite there yet. And then you come home And then all of a sudden the daffodils are coming up and it is actually getting warmer. And you think, oh, good, winter's over. And then you get this one last snowstorm and you go, winter is not over. Would you go away, please? And then spring finally arrives. This is what Pluto was doing this year, in my opinion, as it goes back and forth between Capricorn and Aquarius. And this slide suggests that during the political campaigns in this country, in the United States in 2024, it could have significant influence. For example, it was in Capricorn last night, January 15, when the Republicans in Iowa had their caucus and overwhelmingly voted for former President Trump. There's also a federal funding deadline coming up at the end of on the 19th, the end of this week, that still hasn't been resolved. And those are Capricorn things. Capricorn representing old, same old. Capricorn, Pluto moves into Aquarius on Saturday, January 20th, and stays there through September 1. Now, politically, nearly all the primaries in the country, with the exception of the Iowa one caucus yesterday, all the primaries and both political conventions will be held while Pluto is in Aquarius. So despite yesterday's results that are related to same old, I think Pluto in Aquarius could be really interesting this year politically, because of all these events that are occurring with Pluto in Aquarius. That is about new ideas, freshness, advancement, that sort of thing. And so, and then note that and then it starts with the New Hampshire primary on January 23rd, Super Tuesday, where there's 14 or 15 states that vote on March 5. The Republican convention, July 15 through 18, and the Democratic convention, August 19 through 22. Both conventions have issues astrologically. The Republican convention looks nothing short of explosive, and the Democratic convention meets while Mercury is retrograde. So any kind of messages could be misconstrued, misunderstood, that sort of thing. But Pluto is in Aquarius, so there could be throughout this period some new ideas that come forth, some new people with new ideas that start rising to the top. But then Pluto goes back into Aquarius, September 2 through November 19, which includes Election Day. And so despite whatever kind of newness might come up from the Aquarius influence through most of the year, on Election Day in the United States, I think voters will end up grabbing onto what feels comfortable, what feels tried and true, however we might define that by then. But then 2 weeks later, 2 weeks after the election, Pluto moves into Aquarius for the next 20 years and brings its transformation capabilities into ideas, intellectual property, and so forth. The last time Pluto was in Aquarius was the start of the Industrial Revolution. It was when the United States wrote its Constitution and formed the presidency. And it was also the French Revolution. So things change. Change happened when Pluto was in Aquarius, and I expect that to happen this time. So the next slide, please. I'll take a little sip of water. So Pluto moving into Aquarius also really, I think, gets the ball rolling into what I call the air economy that officially began at the winter solstice in 2020, when Jupiter and Saturn, the two planets associated with economy and economics, made a conjunction at 0 Aquarius at the winter solstice. This marks the start of a nearly 200-year period where Jupiter and Saturn will make conjunctions in air signs, Aquarius, Gemini, or Libra, for almost the next 200 years. And it ended a period where they had been making conjunctions in earth signs since the mid-1800s. Excuse me. So Earth economies that we've all lived through most of our lives valued things that you could touch and feel, things that were rooted in solidity, had value, physical stuff. In the air economy, we as people around the globe, and reflected then in the markets and the companies that have value, will reflect values that the air signs represent. And in Aquarius, that's revolutionary ideas, individual freedoms, global community. In Gemini, that's communications, the brain, education. And in Libra, equality, beauty, and peace. So when you're looking at companies in the stock market to see what they're doing, see if they're aligned with these kind of values from the air economy point of view, because the cosmos is telling us that for the next 200 years, that's going to be valuable. And I will remind you that we had a little preview. Every time these big shifts happen, we get a little preview. And the air economy preview was from 1980 to 2000. And that was when we got computers, cell phones, the internet, and online trading. And it ended promptly when the preview period ended and Jupiter and Saturn went back and had one last conjunction in an Earth sign. So the previous air economy was from 1226 to 1425 and included the Renaissance, which is considered a rebirth of intellectual life. So we're in a cosmic period that supports reinvention, intelligence, that sort of thing. So now if we can go to the next slide, please. So here's how I look. These are horoscope charts. And on the left is the Saturn-Jupiter conjunction in the circle at 0 Aquarius. And it's connected to at Mercury at 0 Aquarius in the NASDAQ 100 chart, horoscope chart from February 1, 1985. And so I think that the air economy has anointed the NASDAQ 100 as the index of choice. I think ultimately the NASDAQ 100, because of this, could be considered the institutional benchmark for this air economy. On the right-hand side, I also find it interesting that Bitcoin, which started in January of 2009 at the very beginning of that Pluto transformation in the financial industry, and maybe this is the transformation in financial industry that came out of the Pluto and Capricorn period. And this is when it first launched, with January 3, 2009. And I use a different chart for watching prices. I use the one from January 12, 2009. But so this one, the Bitcoin launch, is to me like like an incorporation chart. And so maybe it's Bitcoin, but I think more likely it is the impact of the blockchain that also is connected to the NASDAQ 100 chart, as you can see here with Jupiter and Mercury on the outside, connected to Jupiter and Mercury on the inside for the NASDAQ index. So I think there's some connection there that maybe we don't know the full story yet, but I'm watching it. So the next slide, please. And so this is a 5-year chart of the NASDAQ on the top, the S&P in blue in the middle, and the Dow Jones Industrial Average in orange on the bottom. And for the last 5 years, the NASDAQ has outperformed each of them by a factor of 2 or 3. And so just another point in the, my opinion, that the NASDAQ is more representative of the air economy and what we're moving into than the other two indexes at the moment. Oh, and here's notes that I have. I think it'll be interesting to see, though. One, all the market analysis methods that were developed to everything technical analysis wise, fundamental wise, that we've all been trading with and analyzing with was developed during what I call the Earth economy. And if you'll remember during the dot-com boom, there was a real question paradigm wise about whether all that stuff really worked anymore. Did profits really matter in terms of a stock's valuation? And I think we're going to have to address that again. I think that was just the opening salvo in the dot-com boom of the late 1980s. And we'll revisit it again. But you know, keep your eyes on new market analysis techniques that might be more aligned with air economy to help us all evaluate markets going forward. So the next slide, please. And this is just a chart to show you that NASDAQ and Bitcoin have been relatively moving together over the last 5 years. Once again, I think because of their connection astrologically that I pointed out earlier. And the next slide and final one. And here's how I'm looking at Pluto in the early degrees of Aquarius and the markets that I watch. I watch 8 markets on a regular basis, and 6 of them have planets that Pluto will make significant connections with over the next couple of years as it travels from 0 Aquarius through 2 and 3 Aquarius. And once again, let me remind you that these connections happen once only every 250 years. So they are important. But just by themselves, Pluto moves too slowly to really create a high or low situation. There has to be other faster moving planets that move into it. But it is significant. It does have, I think it will have significant influence. And the one at the top of the list is the US 10-year T-note. And the futures market has Mars at 0 Libra and Mercury at 2 Gemini, which are already 120 degrees apart. Pluto is coming in to make a third final triangle, a grand trine. And in charts I've looked at, when grand trines happen in this chart, the market, the prices, 10-year T-note prices can make a low. And so this year I'm looking for a low in the 10-year T-note futures, January 22 and February 16. But I think there's pressure on T-note 10-year on the 10-year price all the way until Pluto gets through 202 Aquarius, which is not until January of 2026. So I think there's pressure on T-note prices for the next couple of years. Which means that there could be upward pressure on interest rates themselves, which doesn't seem to fit with what's going on fundamentally. But, oh well, we'll see. As we saw, NASDAQ has Mercury at 0 Aquarius. Conjunctions to that with Pluto could mean a low on February 5, a high on August 8, as other planets are also falling into line. Bitcoin, the price chart for Bitcoin that I use January 12 of 09 has Jupiter at 1 Aquarius. So Pluto will be conjunct that. And conjunctions to that Jupiter typically are low in Bitcoin. So watch March 13, June 24 this year for that. Gold futures has Uranus at 01 Scorpio, and which makes the Pluto aspect a square to that as it gets to 1 degree of Aquarius. And almost all aspects to Uranus in the gold chart are highs. This year, look for when Pluto is square, look for a high potentially April 19, July 3. NVIDIA, I don't follow NVIDIA, but the chart is really interesting. because it has 4 planets in Aquarius. So I think it will be it will be aspected by Pluto for a long, long time, over several years. But the most relevant ones are, or most immediate ones, are that the NVIDIA chart has Neptune at 01 Aquarius and the Sun at 02. And so I would look for a low, because the Sun is also conjunct that market Sun on January 22, and then the other years when Pluto will get to the other planets. Stretch all the way out to 37, 38.
Wow, that's a pretty comprehensive view. I'm quite fascinated by the precise views that you've got there, and you're even saying for February highs in Euro FX, which is quite intriguing. And then just bringing us to the end here, so you have a series of S&P outlooks that you think, but those are going right into the longer term, when presumably over the next year or two you also see that that's going to be more of a time for the NASDAQ 100.
Yeah, I do. And for the S&P, really the Neptune connection in that chart really doesn't do too much, but that opposition to Uranus is often pretty strong. But 50-50 on whether it could be a high or low in those periods on the chart. Q2, 3, and 25, and then most of 26. So we'll just have to see as we get along.
It's quite incredible. I mean, you're looking at quite a huge upheaval in markets as a whole. You're talking about a change of a whole era, and therefore we're going to see something completely different coming up. The mention of vast upheaval, if not revolution, is certainly a little bit scary, given the fact that you mentioned the last time we saw this cycle, 1762 to 1778, I think you mentioned, which obviously coincided with a very volatile time in the creation of the United States of America, although it worked out pretty well for the course of the 300 years thereafter.
Mm-hmm. And we are still not done deciding that, it appears.
Yeah, it's still a work in progress. Even the countries with massive monarchies, they still go through the odd little period of turbulence. And the countries that are republics have all sorts of debates that go on about whether or not they should be a republic and how the republic should work. So it's fascinating altogether. I mean, I really, really appreciate the time you put into this, Susan, to give us these great and interesting outlooks. Well, what do you think is the final thing to say on the topic for the year?
Well, for the topic of the year, I do think it's Pluto. And in this, end of winter, start of spring transition, it's in a transitional period right now. And certainly this year, and potentially there's a little hangover into the next year or two before it really takes foot. And it will get help in 2025 when all the other what we call the outer planets, Jupiter, Saturn, Neptune, Uranus, all change signs in 2025. And that's the first time that has happened since 1956, and only the 5th time it's happened since the mid-1700s. So it brings enormous social change when all those outer planets shift signs and shift energy. And there's an astrologer, a French astrologer, who wrote in 2014 that what is coming up in 2026 is the most benefic configuration. I'm quoting him, Andre Barbolton, quote, "the most benefic configuration of the century, and its interplanetary partnership will work for the best in a splendid relaunch of civilization. Human beings surpassing themselves while experiencing life on a higher level, and a new great phase of technological growth, altruistic in nature, between 2026 and 2028. So I think the message for 2024 is that we have to embrace the change that Pluto is getting ready to make. And because it ties into this larger 200-year period of recognizing that ideas and intelligence and community are important and will be valued.
And quite incredible, because he wrote that in 2014, talking about a fundamental relaunch of civilization. And obviously he didn't have ChatGPT or any OpenAI in order to manage to write that sunny optimism for him. So we presume he did his own research at that point in time, unlike many of the PowerPoint classes, at least in corporations these days. So that's really quite the most incredible review. I really appreciate your time today, Susan. It's been fabulous to have you on the show. Thank you for being here. We'll be watching those dates with intent interest to see what happens on all of them, particularly that interesting contrarian in T-notes, because that does look to be, well, certainly very much against the majority zeitgeist of the media at the moment, where everybody in the world seems to be looking for rate cuts, which definitely doesn't seem to be the thing. I suppose, ladies and gentlemen, that's going to bring us on elegantly to our next guest. Thank you very much, Susan. Goodbye, and have a great day. I hope the weather improves for you soon. The joys of spring will be upon you. Let me just mention at this point in time our finance book of the week, actually, ladies and gentlemen, because that rather neatly aligns between the two speakers today, from Susan Abbott Gidel on to Ira Harris. This week's book, Mania, Panics and Crashes. That was written by Charles P. Kindleberger. It was later updated after his death by Robert Z. Alabar. Mania, Panics and Crashes really is perhaps the most important book to read in the crash genre. If you want to understand irrational exuberance, the name of another great book on the topic, then you really cannot do without managing to read the original classic tome, Kindleberger, which goes back through history and all kinds of very, very strange, odd and interesting manias. I suppose building on various other works that date from, well, several hundred years before, such as Popular Delusions and The Madness of Crowds. You can get that book on Amazon and all great bookstores. Of course, don't forget, if you like the topic of exchanges, markets and market infrastructure, don't forget to subscribe to Exchange Invest. That brings us elegantly, ladies and gentlemen, and thank you very much, incidentally, for the conversation so far. Colin Howard, I hope you're still with us. It's really good to hear from you. Thanks very much as well to Chris Messina for your input. I'm sorry that you didn't find the first half of the show quite so engaging, but this I think you're going to find very interesting as an old line trader. So, Ira Harris, ladies and gentlemen. In some ways, he needs no introduction. Good afternoon, Iris, but we're going to give him one anyway. He's another IPO-VID alumnus alongside Susan from episode 112, discussing patience is a virtue. Ira has over 46 years experience in all active arms of commodity trading with broad experience in cash currency markets. Ira is an active macro global trend trader, and he's a regular guest on a multiplicity of different shows around the world. In fact, I had a great listen the other day. You had a marvelous show, Ira, with the fabulous Boom, Doom and Gloom report publisher Mark Faber himself. That was really interesting.
Thank you. And who's better? When he lights up 2 cigarettes, I'm dying. You know, who else could do that? But you start out with 2 books that are critical in my library, which is I have thanks to Owen Brown, I have a first edition of The Madness of Crowds, and Kindleberger, I've been reading, how old? 50 years.
Yeah. So. They're great books. I mean, they're really, really good books. And I mean, Popular Delusions, the old Mackay book, which I think, I mean, most recently, the last copy of it I picked up was something like the princely sum of $1 or $2. It was in a cheapo new edition paperback somebody done of it. It's a really, really interesting book about craziness. And yet you can see, just like Confusing to Confusiones, the world of markets several hundred years ago, remarkably similar to the world today.
That book always gets discounted during the bull market.
Yeah, absolutely. All of the bear books is here. It's always so funny though, isn't it? All the bear books, when they're being discounted, I always think that that's probably a contraindicator. It's also the same way that at the point in time when we're all at max pessimism, everybody's writing bearish books, if you remember that. I mean, you know, in the middle of, say, 88, you suddenly had a rash of bear market books, and yet actually the stock market was picking up quite nicely.
You know, the copy of the Kindleberg copy, which you have the forward written by, I had to sneak into his class in 1978 when I was working at the Exchange, but I used to go down to Hyde Park to sit in on Professor Albert, because when I wrote my master's thesis, I relied on his book. He is the dean of foreign currency and understanding foreign currencies. And in the 70s, when I was writing my book on multinational my master's thesis on multinational corporations, came to rely on it. So when I could go down there and kind of make my way in, I actually introduced myself to him, and I have a friend who knows him later in life pretty well. So
it's fascinating when you think about it, actually. I mean, obviously there is a a degree of interweaving between the two. But in many ways, we think every day about how important the Chicago exchanges have been to the world of differentiated derivatives and the advancement of the financialized economy. But without those economists, the Chicago School of Economists, and the many great brains that you had all lecturing within a handful of miles of the Chicago Board of Trade and the Chicago Mercantile Exchange buildings, where would we have been, Ira? Because I mean, that they had an incredible impact on the late 20th century.
And there is the great Charles Kindleberger, and this was in a book that came out not long ago, but this was right up my past and present history, International Political Economy. I will tell you, it's an intellectual history written by Benjamin Cohn. It is worth a read. If you're really into international political economy like I am, and an absolute, I absorbed so much of it, but it came out now when it really was a great history. And the person who told me to get it, of course, was my friend again, he said, "Oh, you're going to be vindicated." It came out in 2008. Because I knew it was time to leave graduate school because I wasn't a very good modeler. I'm much too discretionary. And, in academia, they always want you to build models because it makes it easier to criticize.
and then also, but said that you say you're not a very good modeler. All I can say is thank goodness then you didn't go into government service, which seems to be where all the other bad economics modelers have ended up. Certainly the UK government seems to be full of them. There's not a single model that's credible.
Well, you know what? It's funny that you say that, because one of the mainstays in his book, and I didn't know her really until later, was Susan Strange, who really turned political economy in England on its head in the 80s and 90s. And she was, I mean, anybody who's really interested, it's not a long, you could read it. It's about some of the great characters, and it covers Kindleberger, which I was kind of surprised to see that he got such a big play. But because I was always more used to Gilpin and Raymond Vernon, but quite a road. But when you pull up those books, I have a good, my mind goes into fast recovery. And again, that's why last week I enjoyed sitting with Mark Faber so much. And I gave him regards from you, and I'm supposed to give regards back to you.
Oh, I appreciate that. I appreciate that. It's been many years since I saw him. I think the last time I saw him was possibly at Bergenstock when he came and gave a scintillating keynote that terrified the delegates at my invitation. I think it was a high watermark for my involvement with the Swiss Futures and Options Association as a board member. He's a great man, really fabulous, always insightful.
He's such a deep thinker, and you can get angry. It doesn't matter. He'll lay it out, and you don't have to agree. And he doesn't expect you to agree with him.
Yes. And he remains the epitome of cool, I think, amongst all financial analysts, economists, whatever, present company accepted, of course, Ira. But he is just such a character, even now. I mean, in his somewhat more mature age, but he always was. He was always quite a character with his ponytail, riding Harley Davidsons around Hong Kong and so on and so forth. He was quite a guy at all points in time.
Yeah, he is, and he puts it out there. You know what? He doesn't balk when he. And this is the third or fourth, no, probably the fifth podcast I've done with him. And him and I are very simpatico on our stance on the military-industrial complex, and its funding and how it works. And he regularly refers to NATO as a criminal enterprise. So, anybody of his stature who puts that out there like that, you got to say, wow. And that's what really caught when he was doing the Barron's Roundtable for all those years. It made that roundtable, the 3 weeks of the roundtable in the first weeks of January, to me, was always worth the price, the annual price for Barron's. Because the roundtable with Zuloff and Faber, and it was a powerful group. And then, of course, you had the editing of Alan Abelson and stuff. So that was really good. So,
Quite amazing altogether. Let me just interrupt you a second because we're getting
Uh-huh.
still some feedback coming through from Susan's presentation before. And we had an excellent remark there from Anne Berg, which I just hit the wrong button. Thank you, Susan, for such a scintillating presentation. I agree. It was incredibly thought-provoking and quite fascinating, although it may not have been everybody's cup of tea. I'm aware of that. So, look, here we are. 2024 has dawned. We had a great conversation in Q3, Q4 of last year. How do you think the year stacks up now that we've had our first caucus of the year and the primary season is underway?
Well, and I never belittle anybody's work, and I found Susan's work actually very interesting. And I would never, even though it may not be something I paid attention to, but I'm incredibly, I believe too, and it doesn't take a genius to say, oh, this is going to be a very chaotic year. But what are as I say, the piles of dry tinder that are going to create a multitude of prairie fires that make this year so chaotic? She leans on astronomers. I'll lean on Mao. And this, I thought this, and we talked about it earlier. I mean, even before we saw everything else that's going on now. So I think there are some major concerns, and how they play out, I don't know. I'm watching the Fed here, and right before I came out with you, I listened to Brookings had Chris Waller. Is that they had Waller on, and give it a he was interviewed by what's his name, David Wessel at Brookings. So that was interesting because the Fed is, I read a piece the other day by a guy named, it doesn't matter who, it was in Inside, what's his name, who was bought by the German,
Business Insider.
Yeah, Business Insider, yes. And that the Fed wasn't political. Well, right. I don't believe that for a minute. And as I say, you could say the Fed's not political, but the Fed has always been political. So that's not the point that Powell or Greenspan or Bernanke. I go back to the early 20s, 1920s, when the Fed was very political, as they were trying to help Britain return to the gold standard.
Yeah.
And all the havoc that caused. And then, of course, you just go, and then, of course, from 46 to 51, with the famous Accord. And then you have Lyndon Johnson having McChesney Martin up against the wall and, threatening them. And then, of course, Nixon and company beat the hell out of Arthur Burns into submission. So the Fed always has some politics. To say otherwise, to me, I think is a fool's game. Because I can look at the Biden Fed, and there's 4 or 5 governors who have been handpicked by Biden and approved. We saw one fall by the wayside, but she had been, which kind of was surprising because she had previously been a governor, Sarah Bloom Raskin, Jamie Raskin's wife, but that's not why she should be known. She's a very good economist in her own right. But she didn't make it past this time, which was kind of interesting, and got downplayed very quickly because she was one of the appointees. But there are 4 governors who are sitting in those seats, and they're all labor economists. Kugler, Philip Jefferson, Lisa Cook. And then Waller is starting to shift a little bit softer in his view. So the governors are interesting because the Fed is like Animal Farm. Everybody's equal, but some are more equal. And the governors carry a lot more weight and power than the regional presidents, by the way, because they vote on the discount window. They vote on the interest on reserves. So they have some votes that they could take without the regional presidents. The regional presidents may may opine, but they have more influence. So in Powell's press conference going back to December 13th, I mean, that was just as dovish as he's ever been. Well, I won't say ever because during COVID, early parts of COVID, he had some speeches. But for as recently, he was very dovish. And you don't have to take my word for it. You can go back and pull up charts, whether you're charting the S&Ps, whether you're charting any of the equity markets, whether you're charting the gold market, whether you're charting the interest rate markets. They never had corrections during that whole press conference. They just kept rallying and rallying and rallying and rallying. So I know how dovish I was because I watched the markets very closely during Fed press conferences because I want to see the way certain things. And if the market has a very bullish reaction off of the FOMC statement that comes out at 2:00 Eastern time, 1:00 Chicago time, but then gets walked back because you get gyrations up and down during the press conference, that's done intentionally. This time there was no back off whatsoever. It was straight up across a myriad of asset classes. So it wasn't me saying that it was a very dovish position. It was the market saying it. And then we've had it walk back since by regional presidents. So we're getting these, today's a classic case. I mean, we've gotten, for not a lot going on, we got a lot of movement in the interest rate markets. Yes, I know we were closed yesterday, but we've backtracked quite a bit and it's taken a few things with it, especially today. But I think the Fed is going to be far more involved in this. And I think they're getting a lot of pressure from the White House. And don't forget that Janet Yellen was a Fed chair, and Lael Brainerd, from everything that I had known and thought, she was set to be the Fed chair in 2021, but Powell got reappointed. And so she immediately left the vice chair and went to the White House as the head of the National Economic Council. So there is a lot of firepower from the White House pointed at the Fed. And those four governors who I cite were all handpicked. I will tell you this, Lisa Cook, I believe this, and I believe this is right, did her dissertation under Kamala Harris's father, who's an econ professor at Stanford and Berkeley. So there's a lot of connection here. And it's a very political year. And it's a year in which the politics we thought they were divisive in 2020. And was it Susan, right? Susan?
Yes, Susan, yep.
Yeah. As she points out, astrologically, these are setting up forever, whatever you want to put to that. But lots of stuff going on here. I am looking for great volatility. And I'm not even talking about geopolitical events yet, per se, but the Fed is certainly a geopolitical actor. All we're doing right now is seeing the market unwind some of the 6 cuts, which I thought was crazy.
Yeah.
That they were factoring in. So now and even Waller today talked about 3 cuts. So the market originally rallied.
It's very interesting. I mean, one of the things that struck me about Susan's presentation was her talking about almost a contra indicator in the notes, which I suppose what drives my thinking there is perhaps it's a case of it's not so much that necessarily the market actually tightens physically, but simply that the market is so far wrong and over leveraged in the wrong direction, because everybody seems to think that we're kind of going back towards almost zero interest rates, as you say, with the number of rate cuts that people were factoring in. And I mean, my experience has always been rates never come down remotely as quickly as the human psyche reckons they're going to be at the best of times.
Yeah. I can't, Patrick. That's exactly right. They're building it in, and I'm a big believer that markets build in perfection. Mm-hmm. And if you have a market priced to perfection, it's a market you have to be very careful of. And I thought that in 2000, especially after the market was flooded with liquidity heading into the Y2K. And I would say to people, because I had people who were family members of mine, my brother, my nephews. I said, after the turn of the year, I said, get out of some. You've been given the greatest gift. Take 50% off the table and see, because they were loaded up in, because every advisor that they used, everyone was pushing the .com and, well, what do we call them? The MTM stocks, media, telecom.
Telecom medias, yep.
So they were, I said, take 50% off. You can always people forget they can always get back in.
Yeah.
Oh, I'll have to pay taxes. Yeah. Well, you know what? If you're afraid to pay long-term gains, you're a little too greedy for me to advise anyway. Because as I say, if I could pay 26 or 27% every year as my tally, I'd pay it in a minute and be done and go on. So if you really, so these accountants who tell their people, oh, all you're going to do is have a tax hit, take the tax hit, because it gives you a flexibility that, and who loves flexibility? Nobody more than Warren Buffett, right? He's sitting on a pool of probably 150 billion of T-bills, earning a nice cushy 5.25%. And what does it do? It gives him flexibility to move when he believes the time is right. And that has a different type of value. So, I'm never in favor of that.
You're hitting so many things that are really interesting there, and certainly, I mean, the whole issue about people in the middle of manias, as one of my friends in Monaco described the .com bubble. He said, I only made one mistake investing, and that was that I was hoping to get the villa in, most beautiful villa on the French Riviera, plus the private jet and the yacht in one portfolio, and that's never quite how it works out, right? I mean, you get something in those really amazing markets, and of course, he invested until, to quote Woody Allen's maxim, all the money was gone, as Woody Allen described stockbrokers. What I'm really interested to hear is, I mean, you mentioned this huge pile of tinder around money, and you've talked about the Fed as such. One of my big areas of concern is how money impacts everything. What I mean by that is how interest rates impact everything, because even if interest rates start coming down very rapidly, it strikes me there's an appalling amount of volatility out there to come just from people who are desperately trying to refund floating debt.
That's a great point, because they're out there. And I know my mailbox was filled for the last 2 days with the clip from 60 Minutes about the New York commercial real estate market.
Yep.
Everybody, is pointing at now that, well, this has been going on. This isn't new, but now, as we say, the bill is coming due, and the bill is not what you thought it was, and there's other unknowns. So a lot of people are nervous. It's been a long time since we've seen, as Jim Cramer would talk about, when it went back in 2007, 2008, when he said, just mail the keys back to the bank, right?
Right.
You actually have people in the commercial real estate doing exactly that. And this is not residential housing. And why? First of all, if you're sitting on cash, this is one of those times, if you're sitting on cash, opportunities are going to open up.
Yeah.
And people who are chasing this market here in a 5% 1 year, that you could buy a 1 year T-bill and get over 5%. What are you chasing, or what are you looking for? Yeah, I understand. The year was great if you happen to be in the so-called Magnificent Seven. Or others might call the Seven Samurai. You might have a different outcome with that. Yeah. I just don't believe in that chase. Can I find good stocks in the way that I analyze the stock market, which is a top-down analyst? Yes, but I'm not going to buy the market per se. I just don't see the value here. And why are you chasing it? What are your needs? You have to, if you have all this excess capital and you go, I'm in here for, the famous line, I'm in here for the long pull. As professionals in the business always talk about, in for the long haul means it's a losing trade, right?
It's so interesting, you talk about the long haul, and I can't help it. I've just picked this off the shelf from behind me, which is Anthony Sampson's The Seven Sisters. And it's just you talking about the magnificent seven stocks that we're all fixated with at the moment, and talk about certain parties who are shareholders could become the world's first trillionaire and so on, which has vexed lots of NGOs. But of course, the Seven Sisters were the oil companies. And in 1975, when Anthony Sampson published that book, it looked as if the oil companies would reign supreme forever. And yet, if you look at what their returns have been over the course of the last, 50 years since then, I think you'll find there were an awful lot of other things. So, I mean, there's such a cyclicity which people don't sort of stick on to. And in fact, we can offer an even better insight from one of the earliest books of Anthony Sampson was all about the wonderful, incredible world of digital technology. And it was Inside the Corporation ITT. Whatever happened to them? I mean, good grief. There's a company really from the archives. And of course, what we saw last year was what Toshiba are delisting from the Tokyo Stock Exchange, which is quite incredible. And you think that, I mean, the word laptop was almost synonymous with Toshiba, or Toshiba with laptop, just 20 years ago. So we get a huge amount of change out there. I'm really interested. I mean, just to move it, money's a big risk. Big risk into property. And I'm not just playing this from the bear side. I mean, these are just the risk. What other big tinder piles do you sitting around the world, Ira?
Well, another potential, and you have to wake up to it, is what's going on in Europe.
Mm-hmm.
And the fear for me in Europe, and I watch the ECB a great deal because, again, another large central bank. But there's a lot of you talk about the politics in the US, politics in Europe are moving right. You have the Dutch. How can the Dutch just elected Geert Wilders, right? And anti-immigration. How can you be in a bad mood in Amsterdam with hookers and marijuana? Well, if you're not happy there, who's happy? But you have the Italians who moved right. Macron is under a lot of pressure from the right. And in Germany, the AfD, which there's I believe four regional elections coming up, all expected that there's a high probability that the AfD may carry those regions. So you've got movement afoot. And my fear in Europe, and Europe gets underplayed, but Europe has 19 diverse, I have them right in front of me, bond markets.
Yep.
Because they have no fiscal harmony in Europe, and there's no European bond except for that which was issued during the pandemic and are called PEP bonds. So without a harmonization, there's really, the question always rises in my head, who's guaranteeing the ECB?
Yeah.
So,
and I think the other problem with Europe is there's a more fundamental question of quis custodiet ipsos custodes, because once again, the European Union is remarkably bereft of democracy, even in a year when 400 million Europeans are going to supposedly elect the European Parliament. But as we all know, that's only really 1/3 of the big deal, and nobody gets any say on any of these other people, whereas at least actually the people who go on to be the Fed governors and the different people running the Fed and running the regional Feds actually do have to turn up in Washington, D.C. and at least put in some sort of an appearance in front of the politicians.
So it's a very good point. And so don't forget the EU is a top-down project.
Yep.
This was, in fact, what's his name just died. So who else?
Jacques Delors. Yep.
Who?
Jacques Delors. Yes.
Jacques Delors, and Wolfgang Schäuble died a few days before him, which was kind of interesting. Wolfgang Schäuble was always interesting to watch. So Jacques Delors is gone. Mitterrand is gone. D'Estaing is, So what's his name for Helmut Kohl? These people are gone, and again, when you realize that it's a top-down project, because every time that a country would hold a referendum, if the results didn't come out right, they always redid it.
Yep.
Every one of them. So when they voted for the Maastricht Treaty, which most people don't even understand, the Maastricht, when it passed, I call it's a Maastricht straitjacket, because economically it made no sense whatsoever, none. But they were paying homage to Germany. And just for the record, it's the German credit card that guarantees the entire EU project and the ECB. And that's why I always put that you have to watch this, because if the German people are now getting upset about immigration, as they look back upon what Merkel did and cutting and turning off the nuclear reactors, which was which has just been the greatest mistake. And she used what happened in Fukushima as the rationale, but it really played into, of course, Putin's hands. But that's not a surprise, because most people don't realize that the person who ran Gazprom since 2006, 2007 was
Gerhard Schroeder.
Gerhard Schroeder,
Yep.
the
Former
chancellor of Germany. So imagine that. And I believe he's still running it quietly. Because since the invasion of Ukraine, he's been quieter. And this was really kind of all laid out in a book that was written in 2008 by Marshall Goldman, the preeminent Russian historian in the United States, called Petrostate. There's no surprises there. He shows you the pipelines in the book that came out, I believe it was 2007 or 2008. The gas pipe, it was really phenomenal. And I read it a few times, and I had to go back and read it right at the start of the invasion of Ukraine. I said, holy cow, there's nothing new here. But Schroeder made all that, laid the way, and Merkel and him, who were very close, that was the greatest gift that Putin ever had, was turning off those reactors, because it made Germany totally dependent on Russian natural gas. So
once upon a time, I have to say, I made a rather facetious comment in Exchange Invest that I said I thought Angela Merkel was actually a Soviet sleeper agent, given the fact that she'd been born past born beyond the Berlin Wall. And actually, the more she stayed in power, the more it was kind of difficult to actually start to demur from that argument. It sounded as if it might be more plausible than a lot of other cases for Angela Merkel's method of government.
Well, you know what? It's interesting that you say that, because when I was really actively writing my blog up until probably about March of 2023, but for 14 years I wrote the blog, and she was a regular target of mine because I just didn't see it. And Bernard Connolly, I don't know, do you know Bernard?
No, don't.
Oh, brilliant man, who wrote the book The Rotten Heart of Europe. He was brilliant. He was on the group. He was one of the economists on the group who put together the euro, and he knew a lot. In fact, the EU wound up suing him for defamation. They had no case, but he knew so much, so he wrote a book. It's really, in fact, it was out of print, and it was selling for $400. And my friend and I, Bill Shepard, actually brought it back into print with Faber and Faber. And we're selling, and you could buy it now for $4 or $5. And Bernard actually wrote a new, because the book came out in 1995, about 200 copies, and then we brought out 10,000 copies. They're all floating around somewhere, and you could probably buy the book for $3 or $4. It's unbelievable. But Bernard had a phrase for Merkel. He called her the plasticine chancellor. And him and I used to talk about it. I said, when they used to have Merkozy, right? Because the French and Germans were so Sarkozy beat the shit. I'm sorry. Sarkozy beat her up pretty good. So much so that we wound up with Draghi as the head of the ECB rather than the one who should have been the head of the ECB, Axel Weber.
Yeah.
Because that was the contest. And Sarkozy dominated Merkel. I said, this is not good. This is not good. The ECB, whether you like Weber or not, they need a hard money person. Otherwise, you're going to take the Germans down the road. And they did. They did, because Merkel stood behind it. But this, that's why this is one of those piles of tried tinder, because it scares me, because if the Germans, now it's not in their interest, you could say, because the Deutschmark would become too strong, and that's always been the argument against it. But the German liabilities piled up to the ECB and to Europe are enormous. That's why Brexit, and this is not a political statement, I don't care. I was never a big David Cameron fan. Was it right to do it? I think he had to ask the British people. Now the vote came out not even as he anticipated it was going to come out. But the Brits are out from under the liabilities of the ECB directly, right? They don't have those liabilities. They have their own currency and their own debt markets. So they may be very grateful for that. The Germans are totally subservient to it. And if that were to happen, to me, that's the one event that could take place that could set a deflationary spiral. I don't say disinflation, I say deflationary spiral upon the world, because the hit to the credit markets would be enormous.
That's quite incredible altogether. And certainly, I mean, the one startling statistic that I read in Q4 of last year, and I just cannot stop repeating, is that one of the last 15 years of GDP growth. I mean, 15 years ago, before the crisis of 2008, the European Union's amalgamated economy, even of EU27, excluding the UK, was 33% larger than the US. Now, it's a fraction of the size. Why is that? Because the European Union, EU27, has grown by 6% at the same time as the United States of America, despite Biden, despite Trump, despite everything, has grown 84%. I mean, that's a staggering number altogether. And certainly anything that grows at only 6% has got to be under huge economic and political pressure going forward, whether it's from the right, the left, or wherever. So Ira, I mean, very, very interesting. You've picked out these sort of 2 or 3 major piles of tinder that could explode at any point in time. And certainly the one in Europe seems to me to be not so much tinder as possibly actually powder keg as such. What about finally anything else? The energy markets, any other issues in commodities, or anything else you're looking at as a major pool of potential instability, excitement, extra volatility this year?
Yeah, well, the energy markets, we automatically have to just default to the geopolitical events, with everything that's going on in the Red Sea and the Gulf of Aden, and so what happens there, I can't tell you, because there are, although I listened to, and I happen to like him, Dr. Anas Halaji gave a podcast the other day that I tuned in, that I watched twice, and he was bearish on oil prices, but he's turned bullish for different reasons. The energy markets are a very, very tough call here because of the geopolitical. But one thing that does bother me when we come to that is if you take out your maps, and I love to read maps. Susan reads the maps of the stars. I like to read geographic maps. But it's interesting that Biden meets with Xi. The United States administration talks about how they're building relations, trying to repair them with China. Well, if you look at your map, China has a naval base in Djibouti. That Horn of Africa is every bit about the Houthis and the Gulf of Aden and the Red Sea as anything else. Why aren't the Chinese putting some ships in to protect the shipping coming out of there? So there, it's again, I'm not answering in a very rabbinic fashion. I'm answering a question with a question, and that's what makes to predict. I mean, sometimes you can see the world and go, this is pretty good. This is pretty good. I don't see anything really good at this juncture. And we're starting, what makes it so much more difficult is we're starting from bad points. I'm a debt person, and I've always learned to watch debt. I come out of an Austrian Marxist background in the 70s. That's how I was educated in graduate school with professors who were really good as political economists, Marxists, Austrians. So I look at debt. And the United States is in a very difficult situation. And I read what Stephanie Kelton wrote in the FT last week. And I'm not a modern monetary theory person, because I don't believe it's just that easy. So how do we go from here? And already people are banging the drums. And this is something I've been on for a year and a half as I've watched the interest rates start to move up and the debt levels. We are already surpassed, to me, in the United States, a very dangerous political place in that the interest on the debt is now greater than the defense budget. Now, if the interest on the debt was $100 billion and the defense budget was $95 billion, I'd be a very happy person. But That's not the case. The defense budget is probably about 850 billion, and the interest on the debt, we already just went through the first quarter of the year, the fiscal year for the government. So now we're in a projects to about 925 to 100 to 925 billion to a trillion. This is going to result in some very deep budget arguments. And these aren't nonsense arguments. These are going to be serious arguments because it's going to call into all kinds of discretionary programs. We've just overspent ourselves, and it's not necessarily the good time. I believe if you're building bridges and you're putting people to the moon and there's a lot of collateral positive fallout, these are good things. The economy will benefit. Just like, when Eisenhower funded the interstate highway, there was so many good things. We're not at that juncture. We've passed out a lot of money.
I'm going to stop you there, actually, Ira, because it's such an interesting thread, but we've got a magnificent question coming in from our mutual good friend, Jim's Olaf. Jimmy, great to see you. Happy New Year. I hope you are in the best of health and having lots of fun with Margot and the family. Great chat, Ira. No mention of what appears to be an anti-American dominance, both on the dollar front as well as the number of conflicts requiring US participation. China, Russia, Korea, Iran?
Yes, and of course it comes from James. Let's get to the dollar dominance, right? This has caused more discussion, and it has led to the academics have beat up the person who really first put this out, who is Zoltan Pozsar, who I'm a very big fan of. I think whether you agree with him or not, it doesn't matter. He's like a grain of sand in an oyster, right? He is going to generate some really great thinking. So is the dollar dominance going to prevail? I'm not a dollar bull. Now, is the interest rates acting to keep the dollar in place here? Yes. And everything we talked about, Europe keeps the dollar dominant for the moment. But because my fears about the debt and how this is going to be dealt with, coupled with the way I see the politics within the Fed coming into this year, but they're always. I'm not pointing fingers. I'm not building straw men to make a point. Politics are always there. This year they will, I think, rise more, and we've seen the table set for them because the whole discussion of 3 cuts or 6 cuts really emanates from actually Yellen. Yellen gave 2 press interviews, believe it or not, on the day that the Fed was meeting, December 12th and 13th. And she had basically said mission accomplished, which then opened up that. And then Powell got very dovish. I'm not saying it was coordinated, but it seems kind of suspicious. And then Brainerd's out there pushing the same thing. And what are they talking about? Housing costs. So that's like the lever that they want to move, Archimedes, right? This is the lever in which they want to move it. Well, housing is unaffordable now because, and it's not the cost of interest that they're raising. It's that there's a lack of supply. And there's a lack of supply because now money's expensive and builders can't build. And because of the mortgage situation with people like me sitting with a 3% mortgage, I don't want to sell. So nothing's coming to the market. So that's how they're trying to push quietly. That's the first part of the push. So that will send the dollar lower. And I'll tell you something, it won't be good for the United States, but a lower dollar would be good for the world because I think the last numbers I've seen out of the BIS, the World Bank and the IMF are that there's 15 trillion of dollars of debt outside the US. So when the dollar goes higher, that's a strain on the global economy because you have to pay the interest in dollars. And when the dollar is high, you have to find ways to accumulate excess dollars. Now you could say, well, for trade purposes, that's disinflationary. Yeah, but it'll lead to a slowdown in other places. So it's a tricky needle that you have to thread here. And I think that, And if the dollar went down as U.S. rates went down, if the Fed appeared to be caving into some forces, that will send the dollar down. So I'm not a dollar bull here. I may be wrong, but my world starts with analyzing the dollar and interest rates. That's how I begin every part of my day in the morning to look at. Now, on the number of conflicts, we're always in conflicts. We always have conflicts. Whether they catch our attention or not is a different matter. Yeah, I mean, the war in Syria has been going on for how long? Almost 13 years. 600,000 people died, 5 million refugees, if not more. We've had the Ukraine war now, hard to believe, for 2 years. The Horn of Africa between Eritrea, Ethiopia, Somali, I can keep going. Djibouti, there's been a whole lot there, a lot of deaths, and it's still going on. Sudan. So these go on. What catches our attention? What happens with Iran? I don't know. But I still have several questions about Iran, because what happened this year is the person who was the point person on the JPOC back in 2015, Robert Malley, was brought back into the Biden administration, and he was the one negotiating with Iran in 21 and 22, and he lost. He had his security clearance pulled in, I believe, April of 2023. This still boggles my mind because it's not discussed enough. A person of that stature just does not have security clearance pulled. So what happens with Iran? I don't know, because we're supposedly, close to doing a deal with them. I think the Ukraine-Russian war comes to an end, because this is just stupid at this point. This is like, when I look at it and people get upset with me, but I said, do you want to be the last person to die in Ukraine? It's like the last person to die in Vietnam. For what? For what? The great Ukrainian what's the word I'm looking for? Somebody help me. They were supposed to, push the Russians back starting once the spring.
Oh, when they had their surge last summer. Yeah. Yes, exactly. Yeah.
Failed totally.
Yeah, totally.
And now it's just people dying. They're just miscellaneous. We could say in a lot of ways the same thing about Gaza, but that's a declared war. And, if Hamas would surrender, it would be over tomorrow. But we don't know that that's going to happen. China is China. And we saw the election. And is China going to invade Taiwan? We all go to bed in hopes not, because there's nothing good there. And the question you have to ask there, and being that I've studied this back in the 70s, and I had Ed Friedman in graduate school at the University of Wisconsin, who was at that time the preeminent China. So I had a good look at it, and he explained to us then, you have to ask yourself this question: would the United States risk thermonuclear war to save Taiwan?
Wow. Well, Colin Howard reminds us of the phrase counterattack, coming from a good stout military officer of Her Majesty's military during the course of his time in the army. I do believe he was a captain. Thank you very, very much, Colin. I got to say at this point in time, first of all, I'm going to have to wrap this show because we're already way over time. It has been scintillating. Second of all, I'm not even going to try to make any effort in order to summarize what has been said by our guests, Ira and Susan. Hopefully we can bring Susan back on the screen. Thank you very, very much. Susan, as Ann Berg, your fellow Chicago compatriot, has said, what a scintillating presentation, which I think is absolutely a very, very apt comment that she made during the course of today's show. I would also like to thank Ira. The one thing we can say, ladies and gentlemen, is I don't think we're going to get low volatility. And the other conclusion I have to make in this mega macro outlook that we've had for 200 years is, well, I feel like going all the way back to that age of creativity between the 1980s and the 2000s, when the Far Side was the dominant or preeminent cartoon for all those who love their anarchic cartoons. And I feel like that kid in school who put his hand up in the middle of the class and said, "Please, sir, can I be excused because my brain is full?" I think no one can possibly say we've not managed to fill your brains. Capacious as many of your brains are, indeed, are good guests such as Jonathan Cowan, Anne Berg once again, Colin Howard, and Messy Times as Chris Messina. Ira, a last word.
One last point. So I would ask Susan, because when Powell gave a press conference 2 ago, the November 1st, I think, he talked about that the role of the Fed was like navigating with the stars on a cloudy night, right? It was.
Oh, now, I think we've got you on mute at the moment for some reason. Why is Susan on mute? Oh, Susan, you're on mute.
So that was a phrase that blew me away, because my father, may he rest in peace, was a navigator on a B-24. And I know what that means, to navigate by the stars. It's a joke. You don't know. In fact, they would lose more planes who would get lost on the way back from missions because they couldn't navigate by the stars. So, Susan, I want to hear what Susan had to say.
Well, I just chuckled when I heard that, and I actually went to the comments and I'm like, he really said that.
Yeah, I went and grabbed a picture. I sent Rick Santelli, because we were texting about it. I sent him a picture of my father in front of the plane that he flew out of Bari, Italy. But that resonated with me. I said, you don't ever want to say that. That's more than a difficult task, especially, when it's 1943, 44.
Unless, of course, he has an astrologer on staff that we don't know about. I doubt it.
Well, you doubt it, but on the other hand, given how much money the US government spends, it would seem entirely plausible that there could be an astrologer in there somewhere.
But I also want to say to both of you who have been watching markets for a long, long time, and when we're talking about interest rates, I mean, just look at the chart from Fred. We've broken a 40-year downtrend in interest rates.
Yeah,
we're not going back.
No. That's the thing. We've got to, and the worst thing is, it's easy for us gray-headed folks sitting around here, but we have a complete generation of interest rate traders who think right now 5%. My God, egad, some people are going to 7.5% to refund at the moment. That's absolutely catastrophic. And the rest of us are kind of like, our benchmark is kind of like either side of 10%, particularly for European currencies, and perhaps not quite the same, probably 8-9% for the US dollar. But nonetheless, I mean, the equilibrium that they think is staggeringly high is staggeringly low compared to the average we've been through.
Yeah.
Well, are you an American football fan, Patrick? Nope.
No, I'm afraid not. I know there was some bloke was married to some Brazilian supermodel once, and they have an annual show called the Super Brawl, which is a kind of TV advertising festival, and they put a football game around it. That's about my knowledge, but carry on.
Because I was having this conversation with the guy who does my bonds and stocks for me, and he said, would you buy, after he watched the Faber piece, he asked me the same question that Faber asked, would you buy a 10-year at 4%? And he said, I thought about that question, and I said, I advise you when you were doing your cash bonds. He said, I wouldn't let. He says, because 2 out of 3 things can happen are bad. Is that it goes nowhere. The price of the bond, as Susan pointed, I was listening very intently when she talked about the price of the bond. So that goes nowhere. Inflation starts to move up. You start losing a capital cost because the bond goes down in value. Right?
Yeah.
So 2 out of the 3 things that can happen are bad. That's what Woody Hayes from Ohio State football used to say about why he never passed. Because 3 things can happen: incomplete, interception, or the ball's caught. 2 out of 3, I'm not going that way. I'm running the ball.
And
Colin Howard adds, sorry, go ahead, Susan.
I was just going to say 3 yards in a cloud of dust.
Yeah, see, growing up, I was a Chicago high school football player, so
and it's interesting because Colin Howard on screen, he's pointing out the fact that you remember ERM 14%. Well, actually, I can actually remember selling 15% interest rates at what I thought was the cataclysmic peak in the early afternoon before the ARM debacle for the UK fell apart. And actually futures went to an implied 17% that day before they started coming down. And as for volatility was like 30% in short-term interest rate options, which I mean, even in T-bonds, 30% would be absolutely staggering.
Patrick, is Jimmy still on?
I don't know if Jimmy's still there or not, but carry on.
On that day, September of 1992, Jimmy's filling orders in the British pounds. I'm over at 1040 West Van Buren, and I called it. I said, Jimmy, buy all the back months, whatever comes in to sell in the sterling. And Jimmy was filling in the sterling. Buy all the outdated, because I knew that once they pulled it, the interest rates were going to collapse. I mean, that's why Nigel Lawson did it, or Lawson, and who was
it was actually Norman Lamont by that stage. Lawson had moved on. It was Norman Lamont and John Major was Prime Minister.
All they could do is cut interest rates from there. I said, I don't care, just whatever comes in. Yeah, it was September. I said by March, by June, whatever comes in, buy the most outdated. If he's here, he would. So we had a good time with that one. I made more money on that than I did on catching on the play on Britain pulling the bag. So I remember that well.
Well, you know, on that note, all I can say, thank you so much, Susan. Thank you, Ira. We've run enormously over our usual allotted time, but it's been such an incredible discussion. I look forward to getting you both back in the future to hear more about how things go as the year is progressing. And certainly, if nothing else, stay tuned, folks. It's going to be a very exciting year. Next week, we'll be back with John Files. He's going to be talking about market infrastructure. He's the famous disruptor and growth merchant, man who grew the competitor exchange in Australia from 4% to over 20%, despite the best efforts of the ASX to preclude him. That's going to be a great conversation. I just want to say a final thank you to our excellent guests today, Ira Harris, Susan Abbott-Gidel. Thank you so much for your time. Thanks for letting this run over. And thanks in particular to our production team who are working late into the night from their offices. Really, really appreciate your input, Fernando, Marianne, and Jamil. My name is Patrick L. Young. Catch you in Exchange Invest during the course of the week for all those who are subscribed to the newsletter. And if not, we'll see you same place, same time next week for John Files. Have a great week in life and markets. Thank you.
Thank you.